Welcome back to class. This is PM, cash budgets. Okay, cash budgets. You know, we've looked at flexible budgets. You agree with me, Abi? So let's look at cash budget. Then, in the long run, as we proceed, we'll look at operational budget. Okay, we'll look at operational budget. So what is cash budget? A cash budget is a budget that is prepared on cash basis. Okay, it tells us what an organization intends to spend and what an organization intends to what to receive. Abi, it tells you your budgeted inflow and your budgeted what outflow. That's what it is. That's just a cash budget. So there's no big deal about a cash budget. Okay, there's no big deal. So what we are simply doing in cash budget is that we want to get all our inflows in cash and all our what outflows in cash. And that is why we are saying that there's nothing like what non-cash transaction. So cash budget does not record non-cash transaction. Give me an example of non-cash transaction. Depreciation. The simply means that there's nothing like depreciation in cash budgets. Okay? There's nothing like what? Depreciation. Or anything at all that is non-cash. We don't factor it into what? Cash budget. Does that make sense? So there's nothing much. So maybe Aika wants to ask you the purpose of cash budget, Abi. That is just it. Characteristics that is it simple? For me, it's simple. I don't know about you. Yes. Is it difficult? Anyways, I don't know about you, but to me, it's simple. Okay. And one of the purposes of preparing a cash budget is that we want to use it to identify the cash balance. We want to know how much cash is left in the organization to finance what activities. Okay. So that's the purpose of cash budget. So it identifies the excess or shortage of cash at a what? By time period. So we want to know if the company has cash, has money, or whether they don't have money to finance or to carry out what operations. Does that make sense? It also gives the managers what an insight on whether they should what source for money outside. Okay, it gives the manager an insight on whether they should source for money outside. So that's why they said it establishes the need for financing and the availability of what idle cash investment. So we need to know whether we should source for money to finance our activities or not. Then another reason for cash budget is that it helps us identify whether there's idle cash. You don't even know about idle cash, Abi. When money is sitting unused, it's not a good financial strategy. So when we prepare our cash budget, it will help us to know our cash position. Do we have too much money? Do we have less money? Sometimes if we have too much money, we can decide to pay it off as dividend. Am I making sense now? There was a time this guy did it now. Microsoft. I think I had 2008 also. Or 2018 or 2008, one of the times. I think the CFO confirmed that there was too much money in Microsoft. Too much money. What did they do? They declared dividend and paid billions out as dividend. It's possible. Okay? It's possible. If they have too much money, what they can do again is to buy back debt. You have too much money. Why would I be paying interest to debt holders? Let me buy back what? All the what? The debt. Abi? And turn them to equity. It's as simple as that. Anyway, that is just financial management. I mean, this is performance management. Now, let's look at a question on cash budget and let us say it is solved. It's very simple. Okay, it's very simple. Now, look at this question. It said, you are required to calculate the amount of direct purchase in each of the months of June, July, and what? August. I hope you can see my screen. I don't know why this one is shaking. There's nothing original again. This country. Nothing is original again. Okay, so they say we should calculate our what? The amount of direct purchase in each of the months of June, July, and what? August. Then the B partner say prepare the cash budget for June, July, and August. Now, it simply means that today's topic is not just going to be cash budget. Let's dive a little bit deeper. So I will understand cash budget. Let's look at operational budget. Let's look at operational budgets. Let's do both together. Now, the reason why I'm putting in operational budget It's because the requirements, one of these questions is talking about what? Operational budget. Abi? The requirement one is talking about what? Operational budget. What is an operational budget? Does anybody have an idea? To finance what? Day-to-day activity. You want to use the name to bring the meaning out. Abi? From the word operational. From the word operational budget. All right, let's just talk about it quickly. Now, the word operational budget is also known as departmental budget. Okay? The word operational budget is also known as what? Departmental budget. So it is a budget prepared at departmental levels. Am I making sense now? It may include a purchase budget, which is being prepared by the purchase department. Make sense? Okay. It may include what again? Labor. Labor budget, Abi. Maybe HR preparing that. Okay. I don't know. Okay. Maybe HR is preparing that, Abi. It may include your sales budgets. Maybe that is going to be prepared by who? Your sales department, Abi. Why? What again? It can include your what? Your okay, I've done purchase, Abi. It may include your production budget. It can include your material usage budget. Am I making sense now? So all these are departmental budgets. Any budget that you see that is prepared at departmental level, okay, they are departmental budgets. If you have a cash office and you prepare a cash budget, that makes cash budget a departmental budget as well. Makes sense, Abi? All right, now let's see what we can do. So the requirement A is saying to prepare what? A direct purchase what? Calculate the amount of direct what? Purchase. So it therefore means that we are preparing what? A purchases budget. Does that make sense? Okay, I'm preparing a purchases budget. Okay, so let's do that. Now, listen, when we start preparing the purchase budget, you're not cramming any formula. You're not cramming any format. I'll just let you know what you need to do. All right. So the major issue that some people have is that they will think that each of these budgets have their various formats. You don't need to cram formats when I'm teaching you. Okay. So I'm going to tell you what you need to do. So let's take purchase budget. Very simple. So A, purchase budget. Which month are we preparing it? I don't know. We are done with I can't hear you. Now it's now presentation that is the issue. So which month are we preparing the budget? They say for June, July, and what? August. Abi? So let's go. June, July, and what? August. All right, are we good to go? All right, so let's put figures. Let's put figures. Now, why are we putting figures? Why are we putting figures? Because the question says we should calculate the amount of direct purchase. They did not say quantity. They say amount. For example, now, like this production budget that you are seeing, production budget can either be in quantity or in what? In value. So you have to be careful with the question. Whether the question is wanting you to do it in what? In units or in what? In value. So in this case, our purchase budget is what? Is in what? Amount. Abi, it's going to be in what? Naira. Now, how do we know what makes up the purchases budget? That's the question. How do we know what makes up the purchase budget? Let's read the question first. The following data and estimates were available for who? ABC Abi Limited for June, July, and what? August. So look at it, June, July, and August. Now they gave us figures for sales, which we are going to be using for our cash budget, Abby. So it's going to be like an inflow if we're looking at our cash budget. They give us wages, which is going to be like what? An outflow. They gave us overhead, which is also what? An outflow. Then I said the following information is available regarding direct material. The following information is available regarding what? Direct material. As it's shaking. You can use your phone too. In case, but you should be able to see. All right, so the following information is available regarding to what? Direct material. Abi, what do we have? They give us the opening stock of material and they give us what? Material usage. They gave you the figure for June, July, August, and what? September. We already know what opening stock is, Abi. You already know what opening stock is. You already know what, do you know the meaning of material usage? The material that you intend to use for production, Abi, that's your material usage. Good. Thank you. Then we are giving what? Notes. In my solution, I will start with material usage. I will let you know why. Just relax, okay? I know everybody's looking for shortcuts to understand something. So I will start with material usage and I will move to closing stock. And I'll move to what? Opening stock. Abi? And my final answer will be what? Direct material purchase. Does that make sense now? So how do I know this thing? Look at the way I use and know it. Look at me. I usually use my cost of sales. You know your cost of sales that you have in your P&L account, your trading account. What's the first thing in your cost of sales? Opening stock. Add purchases. What do we have? Cost of goods available for sale. What's the next one? Closing stock. What's the next one? Cost of goods sold. Is everybody familiar with this thing? Is everybody familiar with this thing? Good. If you are familiar with this, now you are looking for purchases. So purchases is going to be the subject matter. Abi? So since you are looking for purchases, what you are going to be looking at is what? Opening stock and what? Closing stock. These cokes and cogas, okay, what they simply mean is derived figure, Abi. So they are derived figures. So basically, the figures that were imputed inside there are what? The imputed figures are what? Opening stock, purchases, and what? Closing stock. So since we are looking for purchases, are you getting it now? Since we are looking for purchases, which is this figure here, P, it therefore means that this closing stock that is minus will become what? Plus. Change of subject formula. Abi, do you agree with me? It's mathematics now. Put this in the mathematics. Opening stock, Abi, plus purchases, Abi. Then what again? Minus closing stock equals to what? Cost of goods sold. Oh yeah, make purchases the subject of the formula. Purchases, Abi. I swear, I don't know whether another lecturer used to do this thing. Purchases now be equals to what? Let's say cost of goods sold, Abi. This is what? Minus what? Opening stock. This one is minus opening stock will be what? So why are you now looking like you don't understand what I'm trying to say? When you are doing change of subject formula, plus return to minus, minus return to plus. Isn't it? Now, so since we are looking for purchases, this opening stock that was added here will be what? Subtracted. Isn't it? And then this closing stock will be what? Will be added because it was subtracted before. That's why I say added. This material usage is there, will be there. If material usage was not given to you in the question, go and look for it. Okay, there's a way we can calculate for material usage budget. So in this case, material usage was given to us directly. Now, why do you need material usage? You need to know the quantity of material you want to use before you go and purchase it. Yes or no? You want to make cake or you want to make buns. Won't you know the quantity of materials you need to make the buns before you go and purchase it? So budgeting is a process. So you need to get your material usage first before you can use that your material usage to what? To prepare your what? Your purchase budget. Are we together now? Are we together? So that's why we are doing it like this. So you need to know why we are putting in closing stock and opening stock, why it is plus, why it is minus, and I'm giving you the proof. So what is material usage in the question? What do you have? June is how much? July is how much? August is how much? Now, what is our closing stock? Our closing stock. Is it not there? If it's not there, use brain now. You have opening stock. So if you have opening stock, you should be able to get closing stock. Let me put opening stock first. Maybe that's when your brain will collect that we have the figure. What's our opening stock? 5,000. Abi? What again? 35. What again? Don't mind. So for closing stock for June will be what? Closing stock for June will be what?
Opening for July. Opening for July.
That's 35. Abi?
Yes.
The opening stock of July was actually the closing stock in June. This one back. 6,000 is the closing stock, is the opening stock of August, which means that before August you get to July. So it was the what? Closing stock of July. Then we have what? 4,000 in September, Abi?
Closing stock of
Only as 4,000. Any question, please? Welcome to ICANN. Oh yeah, figure me. Okay, next. 15,000, next. 14,000. Take out your opening stock. This one, Abi. Next. This should be 6,500 now. Are you using 8 for me? Please let me stop this class. I think people are not ready. You think I'm ready to be counseling? You think it's easy to write you this thing? Give me figure, I beg. 11,500. 8,000. This is your purchases budget. Any question? Online, talk to me. Any question, please?
no, sir. No, sir. It's clear.
Okay. All right. So the next one answers to prepare what? Our cash budget. So cash budgets. Which month are we preparing it for? June, Abi. July, Abi. And August. Are we good? So in Naira, cash budget is always in Naira. So I told you that under your cash budget, what are you looking at? You're looking at inflows, Abi, minus what? Outflows. So let's pick the inflows first. What are the inflows? You can also call these inflows receipts. And you can call this one what? Payments. Based on the question, we have already seen in a typical question, sales is usually the revenue inflow. We have other inflow, but sales is usually the what? It's usually the main inflow. So this one that is sales is an inflow. So let's have our sales. But we need to go and check whether there's any additional information related to sales. Okay, what do we have? A, thank you. Yeah, 10% of sales are for what? Cash. The balance is received the following month. The amount received in June for May sales is what? 29,500. Does that make sense now? Does that make sense? Let's be working for it, Abby. Okay. So under the inflow, we have sales. Now our sales are broken down into two. They said that 10% of the sales are for cash. It means that when you sell, you collect 10% immediately. When you register with Pathfinder, you pay 80% immediately. I get it now. So that 10%, you put it here. 10% now. Then I said what? The balance is received the following month, Abi. You can say what? A month later, Abi. Later. Does it make sense now? Okay. So what's our sales? 45,000 in June. But hold on. Then I said the amount received in June for May sales is 29,500. The sales that we made in May, you know, when we made sales in May, the customer will pay us 10% now. Why the balance is what? 90%. So let me just put 90% here so it makes sense. Does it make sense? 90%. So if we make sales in May, you know, it is May that comes before we get to what? June. So 10% would have been paid, Abi. Then when will this 90% be paid? A month later, which is what? June. So we'll come here and put how much? 29,500. You know, this 29,500 will now become the 90% that was paid a month later. Please talk to me if you don't understand. Talk to me, please. I'm here for you. Okay, that makes sense. Now let's start with our sales in June, 45,000. So this 45,000, please do 10% for me. 4,500, thank you. So put it in 4,500. You pay immediately. Then the balance, which is 90%, will be paid when? In July. Give me the figure, please. 40,500. All right. Do this one of 50,000 for me. 10% is what? 5,000. The balance is how much? 45,000. All right. Do the last guy for me. 60,000. 10% is how much? The other 90% does not concern us because we are only preparing from June to August. Any question, please? Any question? Okay, that means it is clear, Abi. Now, after you have completed your sales, what I usually do for exam situation is that I can leave like 2 more lines or 3 more lines. Nobody will penalize me. Am I making sense now? The reason is because what about if there are other incomes? Okay, they're like there are other what? Inflows. So I can leave like 2 more lines or 3 more lines and say outflow because I don't really have time in my exam. I already know that there's an outflow in the question. What are the outflows? Wages, Abi, and then we have overhead. So let's go, wages. And I'm seeing what? Overhead. Now, what did they say about wages? Look for an additional information that talks about wages. That is B. Wages are paid in the month they are what? Incurred. Do you know what that means? In the month they are incurred. So let us go back and check. How much is wages? 12,000 for June will be 12,000. Next one, 13,000. Next one, 14,500. Any question? The next one is overhead. Let's go and check if there's additional information for overhead. Overheads include 1,500 per what? Per month. For depreciation, Overhead are settled the month following. The month following means the next month. Okay. 6,005 to be paid in June for May's overhead. So we're going to pay 6,500 for the overhead that we incurred in May, to be paid in what? June. I don't know if I'm communicating. Are we communicating? Then the other overheads that we have, which is 8,500 down to 9,000. Please, you're going to remove 1,500 for depreciation. Because we are told in the question that overhead include 1,500 per month for depreciation. So if depreciation is inside overhead, take it out, because in this budget, depreciation is a non-cash and should not be what? Factored in. Isn't it? Good. Thank you. Now, somebody want to ask, why didn't I remove 1,500 from this 6,500? It is because the question has already told me expressly that 6,500 is to be paid in June for May overhead. So we are assuming that they have removed the what? Depreciation. You get it? So let's go. Overhead. 8,500 minus 1,500. They go in 7,000. 9,500 minus 1,500. That is all. Any question? Do we need it? You are not looking at it because you are busy writing. Overhead are paid the month following. It means that August will be paid in when? In September. Next. Calm down. Now, I am done with my sales, wages, and overhead. I am done with my opening stock and material usage, but I am not done. Abi, I need to go and check your notes. Is there any other income or expenditure given to me in the question? Are they there? They are there, Abi. I am done with A. Let's go to B. We are done with what? B. We are done with what? C. Let's look at D. Purchases of direct material are paid for in the month purchase, but they did not give us figure. Where are we getting a figure from? Purchases of direct material are paid for in the month that you purchase them. They didn't give us figure. Where are we getting the figure from? I know purchase is an outflow. We have done it before. Oh yeah, copy. Just copy. 6,500. What people give me attention? 6,500. Next one is what? 11,500, I mean. So you see, we have completed our purchase budget, and that's what we are picking a figure from. Next one is what? 8,000. That makes sense. Okay, so we are done with purchases. The next one is opening cash balance in June. You see that opening cash balance? That is the cash balance that you used to resume in June. So leave that one first. That was going to be the last thing we're going to be treating, your cash balance. Then the next one is what? A tax bill. A tax bill of 25,000 naira to be paid in what? In July. So we're going to have it tax. So tax, we're going to pay it in July. So dash, how much is it? 25K. And dash. So there's nothing like there's one format of cash budget. Yeah, this one will come first before this one. Nothing like that. Just arrange your inflows and what? Arrange your outflow the way it pleases you. And we are good. So that is all. Is there another thing? That is all. So please add up this figure for me. Add up this figure for me. Add up this figure for me. That will be our total inflow. Add up for me, please. For June, 34,000. Which one? Next one, 45,500. Next one, 51. All right, so that's that for this guy. So do for the outflow for me. That's our total purchases or total payment, sorry. The first one. So let's call this one B. Next one. 56,500. So the rest of it is to write that you to Sabia. Can you give me figure now? August. Okay, so let's get our net, Abby. Our net cash flow. It's like MPV, Abby. Net cash flow. That is A minus B. 34,000 minus 25,000. Oh, yeah, figure me. 9K, Abby. Do the next one for me. August 2,500. Abby. Do for July is correct. Ten five. Go and check it well, please. 45,500 minus 56,500. Is it 10,500? See what I'm talking about. Sir, don't worry. I've scattered PN. I can't we know. I can't we know. You're giving me wrong figure. I can't we know with wrong figure. No problem. 11,000 a bit minus. Any question? So when we get our net cash flow, you will now see your what? Opening what? Cash. Because the idea is that you want to get your closing cash balance. What's the opening cash? They told us that our opening cash balance in June is 11,750. And this is June. So our opening cash is what? 11,750. So if we have 11,750 as opening cash and we have a positive 9,000, what is our money now? Add up together. How much do we have now? 20,000. Now, this 20,750 is our closing cash for June. That's the cash balance that we close with. Take this money and take it up here. That's going to be the opening for what? For July. It's positive. So minus this 11,000, but this is a negative figure. 9,750. Positive. Take it up here. What do you get? 30,250. So what this means is that as at August ending, you guys have 30,250 naira in your what? Cash account, whether it's bank or whatever. That is it. Any question? No question. All right, so that is all for today's class. So my assignment is on what? Mega laboratory, May what? 2022. Question what? Question 2. All right, 2022 question 2, mega laboratory. So look into that question. All right, ladies and gentlemen, I remain Dr. President. Thank you for your time. And thank you for staying with me.